So we're gonna start with the third module that is for asset book. Now, before this chapter, we have already covered two of the chapters. One is overall introduction of the asset book, and also then how we can navigate through the workday. And security is always important at every step of the level. Then we covered the second part, that is asset class and the asset types, broadly for more tracking, I would say, and better reporting purposes. So let's begin with the chapter. Let's go to the slides. So topic is asset book. So this is the workday screen. So before going to the slides, our agenda is, although I'll cover the slides, this is our workday screen, and our agenda will be asset books and how we can define the asset book rules. So first is asset book, second is book rules, and then we will review some of the account posting rules set for the assets. Now, first asset book will be showcasing how many books we can cover and how through the asset books accounting will be derived. And on an asset book, you need to define your asset book rules basically. So once we define the asset book rules, we need to mention some spend categories. And once we know what all spend categories that we are going to use, we must have some, account posting rules that as well. So these three topics are very correlated for this chapter. First is asset book, second is asset book rules, and third one will be API, accounting posting rules set, especially for the assets where we are seeing, okay, what is the mapping of a certain spend category with some ledger account, so that once we will go with the events for the assets, we will mentioning the spend category, it will derive the accounting as well. So before starting anything, let me show you how we can, what actually a asset book is look like, and then you will identify, you will be, so you can just put like view asset book. The second task as a report. Once you click on view asset book, yeah. So we can see we have asset book, we have asset book name, description, accounting book, and used by the company, and the asset book rules are associated. So broadly, we have accounting, state tax, AMT, federals. We have added so many. So if you would be able to see, the first one is accounting, and asset book rules are associated with that. Now, let's just open one of the asset book. What we can see is a asset book name as accounting, default treatment is expense. I'll help you with that. Now, under the asset book, we can see spend category, the first column, asset class, asset type, the company we need to mention for which this book rules will be, triggered. Company currency, whatever company we're going to mention, we need to mention the company currency as well. And if any company is about to deal in many currency, then we can also provide the company currency. Amount threshold. Now, threshold is as per the what is the minimum level of capitalization. So if I have mentioned as a 500, which means below 500, everything will be expense of and above 500, this asset will be capitalized. Now, 500 as an extended amount, we can also pick unit costing, total invoice value. So now resulting accounting treatment, because we know that if it will cross a certain level, a threshold like $500, then the treatment would be depreciable capital assets. It should be depreciated. Now, resulting depreciation we have mentioned as a term. Now, term is used for the lease assets and intangible. And apart from that, every useful life, if you know that useful life, that is defined as per the policy of the accounting that we are going to mention over here. Like you can see, 24 SL current. Let me open that into the new tab as well. So one meanwhile it is opening, we can see for other companies. So broadly, I would say spend category is important, and under the spend category, it should be trackable. Asset class, asset type is optional. If you want to further bifurcate, you want to use as an filter option, then you can go ahead and do that. We need to mention the company and the company currency, amount threshold. So below the threshold, everything will be expense of. Above the threshold, the amount would be capitalized, and the resulting accounting depreciation and depreciation profile. So I've opened one of the depreciation profile. The profile name is 24 SL current, which means 24 months straight line and current, and depreciation method is straight line. Depreciation rate basis is periods, because it depends on the periods, which means 24 months as in this case. Useful life is periods, because 24 months, that means we have 24 periods. Depreciation posting frequency as per physical period, that is monthly, and place in service based on manually or when issued. So if we register manually, then if it is placed in service manually, then the depreciation will start running from that date or when issued. Now, just please keep in mind, if I have procured an asset in the mid of the month, then rest of the depreciation will be charged for that particular month itself. Depreciation convention, we can give the convention name. It is in use, yes. This depreciation profile is not inactivated, that's why it is showing no. So in a broader sense, what we need is for class. First is asset book. Asset book we are going to define. Then we need to associate those asset book with some asset book rules, where we need to have spend category, company, company currency, amount threshold if needed, and what kind of amount it would be, extended amount or note unit, the resulting accounting treatment, and the depreciation profile. So either we can go like first creating one spend category and then creating a depreciation profile. Then we can go ahead and create the asset book rules. Now, because I have already shown you the workday, let me take you to the slides. So agenda, as I have already mentioned, we have is verify asset book rules, asset books, define the asset book rules, because we need to have asset book rules associated with the asset book. And then we need to review the accounting posting rules for the assets, because in the asset book rules, we are going to mention some of the spend category, and some that spend categories or spend category hierarchy must be linked to certain ledger. So that's why we need to review some of the posting rules as well. Now, why do we need asset book? So basically, asset books are very much important. It basically provides the flexibility. We can create the asset book and we can register the asset book and we can use it for the reporting purposes. Now, other than reporting purpose, like, you want to report it as per the accounting norms, then we would require the asset book. And if you want to report your assets as per the non-accounting norms as well, like you want to have state textbook, you want to have, textbook, you want to have IFRS book, then you can just define the book and then it will follow the norms of that taxation law. And then you can define the norms as well, whatever is mentioned in your taxation law, because we know that if you want to avail your depreciation, for example, there might be a chance your taxation law, your country's taxation law is saying something else, and then your accounting principles. Let's take one example. If we have procured an assets or software is purchased as per the income as per income tax law, income tax is saying you need to depreciate the software 40% in first year, remaining 40% in second year, and then the remaining 20% in third year. Now, which means we need to depreciate our software licenses in next 3 years. But as per the accounting principle, if you kind of think that this software can be used for another 5 or 10 years, then you can just simply apply the straight line method and the rate of depreciation. Let's take one example of 10 years. Then what would be the rate of depreciation for each year would be 10%. But you know that what in this case, how asset book will be helpful. You will create one asset book in the name of accounting principles or IFRS, US GAAP, but you can just name it and you will get it into the Workday. So Workday allows us the flexibility. Let's take let's carry the same example. You will first create one accounting book and then you will define that my useful life would be 10 years and the period would be 60. That is the first thing. And the second thing you can define is your income tax gap or something. The second book you can define, and under that you can use your depreciation profile as 3 years, that is 36 months, or maybe if you want to break it down, like, not in 36 months, it would be like 30 months, then you can define it. So what will happen if you want to report your taxation authority, you can just use your filter option, because you will have the book option there. You will go to the book option, you will select your taxation book, and then you can select your spend category, and then you will have your reporting available. You can just take out the dump, or maybe you can just create a report and then you can forward to your taxation authority. This is what we have charged as a part of depreciation, and it is in compliance with my taxation law. So the first purpose is solved, and the second, on the other way around, you want to comply with your IFRS or US GAAP or Ind AS or maybe any other accounting principle that is applicable for your country or for your company. You can just create another book as an accounting book, and then you can define your depreciation profile. Now, at the year end, you can just pick your book like accounting book, and then you can have your spend category, same spend category, because the books are different. The accounting treatment would be different, and the depreciation profile would be different. Then you can have your everything available. Your reports are available as per the norms of the accounting principles. Similarly, if you so broadly, if you have multiple subsidiaries and the multiple subsidiaries have multiple taxation law altogether different. So let's take one example. You have a subsidiary one in US, subsidiary two in UK, subsidiary three in Europe, subsidiary four in India. Now, because the taxation laws are different in each of the country, so Workday gives us the flexibility. We can create four books. Now we will create the four books for each country, and we will create the books as per the accounting norms as well as for the each country, because there might be a chance this US GAAP is saying different treatment for the depreciation for a particular assets, and IFR is saying differently, as well as Indians is saying differently, and local GAAP is saying indifferently. So you can create the different books, and it will be super helpful, and it will be in compliance as per your norms, and the it is, it will be ready to take out your reporting at the year end, month end, quarter end. So it is super helpful. Now, the second thing is, if your stat auditor will come and they will check your books, so they can also check that it is in compliance with the accounting norms, with the taxation norms, or any other like federation tax norms, state book, state taxation norms, or any statutory reporting requirement that your company needs to follow. So basically, it is super helpful, and it is broadly for the compliance of the country and for the compliance of your accounting principle. So that, and also it is available as per your currency, as per your functional currency, or as per your reported currency. So, and it also sets the foundation for entire life cycle event for a business assets or an assets. So whenever I'm saying business assets, which includes tangible, intangible, capital assets, everything. Now, so these are the main purpose of the having the asset book. Now we have a key attribute for asset book. As we can see, we have mentioned like ledger currency. So we kind of have five key attribute for the asset book that is required to configure, and we need to verify the asset books into the Workday. Now, this is to ensure that fixed asset transactions are flow correctly to the ledger accounts, and also it is complying to the accounting standard. Now, the first one is ledger currency. So, ledger currency is the base currency in which asset book is operating. So, basically, it is critical to ensure that depreciation and the valuation are aligned with the regional entity specific financial compliances. So, and broadly, it is super helpful for the multinational setup. Now, the asset book, as I already given one example, so assets book currency must match with the functional currency so that it will be better to associate with the ledger. Second one is fiscal schedule. So fiscal schedule is, defines the start date and the end date for the accounting period. Like we can have fiscal schedule for each month. If you are following the calendar year, then it will start as from the Jan, and then it will end as a year in December. If you are following financial year, like it will start from the April month of, and it will end in another next year, March, or maybe July to June. So let's take one example. If it start as a July 2025, so it will end as a June 2026. So fiscal schedule is basically start and end date. And this is the heartbeat of every reporting, because we need to have a cutoff date onto which we need to have the reporting as well. And broadly how, because fiscal schedule is super helpful to calculate the depreciation as well. Now, book codes. So book codes are unique identifier for different asset books. Like you can have accounting book, tax book, statutory book, IFRS book, state textbook, other reporting statutory, other book. So basically, it will facilitate to accurate ledger posting and allowing the system to distinguish between different sets of accounting rules, because we have different set of accounting rules as per the books. We might have different set accounting treatment as per the state tax law, as per the taxation law, as per the accounting norms. So to fulfill that requirement, we need to kind of have book codes. Now, a company association. So basically, asset books must be linked to the company so that if any applicable company is trying to register an asset, it will go hand in hand. Primary book. Now, if you wanted to have more books, first of all, we need to link with the primary book, and then we can have more books as well. We can have primary book as a accounting. We can have secondary book as a local gap. We can have third book as a other compliance as well. So basically, the primary book is defining the accounting behavior of every transaction. That's why we need to have primary book, and it typically serves as a source of truth for all the operation reporting and the operation transaction. So, and also for the integration, primary book is very important. So, in order to have asset book, we need to keep in mind ledger currency, fiscal schedule, book codes, which company we are associating, and the primary book. Now, how we can create the asset book? So, this funda is very simple. Whenever you feel like you need to create an asset book, you or anything into the Workday system, you can just either try with the word create asset book or maybe maintain asset book. So the task is to maintain asset book so that we can view the asset book and we can edit the asset book as well. As I already mentioned, we need to mention the currency, fiscal schedule, and book codes just for the accuracy and appropriateness. And we can also view the asset company asset book and we can report accordingly. We can also confirm the asset books are aligned with the organizational accounting policy. So basically, we need to create our asset book as per the, as I said, fixed assets register policy. So every company has a FAR policy, how we can define what categories do we need as per the business model of the book, business model, and what is the minimum threshold for the capitalization, and what is the threshold below the threshold, everything will be expense of what all consideration we need to consider to register the book. So, and also it should be as per the norms of the accounting principle that the company that the country has in which company is created, the legal entity is created. And then we can also, because we need to have the asset book, then it will regular review. If we do have the regular review as per the asset book, it will prevent the error and the accounting life cycle. Now, why it is important to have? Because incorrect asset book can set up the misposting affecting the financial statement. If we create incorrect asset book, then if we want to fetch the correct reporting, it will not give us, it will give us the wrong financial statement, and then it will affect our financial statement as well. Now, because the whole purpose is to have a depreciation and other life cycle events like selling the asset, dispose of the asset, impairment of the asset. So basically we need to ensure that the depreciation schedules are corresponding with the accounting policies. As I said, once we have the books in place, it will be super helpful in the audit findings, and then we can correct the accounting errors as well. And it basically supports a consistent accounting, asset accounting, regardless the geography or the regulatory differences, because we can define the asset book as per the norms and that we can fetch the reporting accordingly. And then also it acts as a preventive control because we are just checking whether the reporting is correct as per the norms as well. So this is the importance of the. Now, after verification, we can define the asset book rules for the automation, because once we define the asset book, we can define the asset book rules as well. Then the once we try to register the assets, or we can, we will try to have the assets as for flowing through the PO or the supplier invoice, it will take care of the asset book rules, and then accounting would be created automatically. So that's how it is super helpful. And it also, it monitor changes into the organization policy and regulatory requirements so that we can update the asset books accordingly, so that we can have a collaboration between the finance and the compliance team. And it also help in the audit trails. So basically, we need to define it carefully, and then we can have proper downstream effect as well. Uh, so this it is saying the same thing. Now, purpose of the asset book rules is to we have accurate ledger posting, acquisition cost, depreciation. We need to comply with the IFRS or local tax cap, and then we need to have simplification of the asset registration and the accounting processes. So as I already told you, we need to take care few things very important. One is spend category, because a spend category will hit our ledger account, and then accounting would be created the company, because we are doing entire thing for a legal entity, the base currency, and then the threshold. And threshold will be taken care from the fixed asset register FAR rules. Now, before doing that, first thing we need to have spend category that is trackable. Another important thing is having depreciation profiles ready. And once we define the depreciation profile, it will be super helpful. How we can define the rules, I have already told you. Maintain asset book rule task. We can create a new rule, or we can add into the existing one. Now, if you're thinking that you have four companies and you want to add another company, you will create a company. You will map few accounting details over that same company. You will go to the asset book rules, you will do the maintain asset book, and then you need to add your new company over there, so that accounting will be derived accordingly for the depreciation and the events of the assets. We need to specify the condition spend category company. So I think the slides are covering. So let me see other slides as well, and then we can directly go to the Workday screen. Then we will take it forward. Same thing we are already explained: registration, depreciation, transfer, disposal, and then the accounting will be auto-generated. Now this is talking about the APR, so we'll take it APR later on. Security permissions are important. Now how we can create the APR, I'll show you. So we can create the APR, we can define the spend category over there under the spend, and then that logic will be derived. So okay. So we'll see the APR at the last. Let's go to the Workday screen directly, and then we can start from the asset books. Okay, I need to sign in again. Yeah, so this is our landing page. Anything you want to start, just check for the security. Now, for the assets books, we need to have domain security policy. For functional area, and functional area would be asset. Now we have business asset tracking that we are going to see into the next class. We have business assets accounting, although we have already seen, but I just want to let you know that, let's go through the description. It will capture asset acquisition cost, asset cost assessment, asset useful life assessment, impairment, spend category reclassification, fair market value, and it also manages the depreciation profile, record depreciation amortization expense, For capitalized assets, it will suspend and resume depreciation, because if we feel that we are disposing of the asset or discarding or donating, then we need to suspend our depreciation as well. Configure multiple companies asset book to support the multiple depreciation schedules. As we know, if we create multiple depreciation profile, and as per the asset book, we can map it there as well. And then later on, we can have the report at the period end. So broadly, we have all the access. It is already enabled and active. So first we have checked that. Now to create asset book, we just need to access one task, that is maintain asset book. Although it is created, but I'll help you with that. So first we need to give a name. Let's give it a name. Business assets training Workday. Description is for business assets training. Will it be act as an accounting book? You can just tick as yes, then it will act as an accounting book, and used by the company is nothing. You can map it later. Let's click OK. Once you click OK, you can see your book as well, BA Business Assets Training Workday. It will act as an accounting book. And first, if you create anything, just make sure you will update your reference ID as well. So once we created, how we can see that? View asset book. We can see our asset book is created. Now, few things we need to keep in mind. One, once you try to create a asset book, it should be unique. It cannot be duplicate. And accounting book, it should be post to the ledger. Now, once we configure the asset book rules that you are seeing into the next tab, we cannot change our asset book. So as of now, I cannot go ahead and this asset book because we have already defined the asset book. Although I can change this IFRS asset book, I can change this operating lease assets book, I can change this book rules as well. But once we create or once we associate any asset book rules with the asset book, then we cannot go ahead and change that. Please be mindful for that. Now, once we create the asset book, what we need to do is we need to assign to our company as well. And how we can do that? We can go ahead and access the task, add company asset book. Let's take one company, GMS USA. We have created one asset book, BA training, and book code is. So this is how we are going to add the asset book. Once we click OK, you can see your books are appearing there. Businesses training Workday, IFRS adjustment, primary book. No, we have not kept because we have already defined the primary book as accounting. And then asset usage is 0 as of now. Now assets to add, we can add this kind of assets to this. And assets books rules we have not yet defined yet. This is the second task that we need to add the company to the asset books. Please be mindful. Once you create a new company, you just need to add the same company to the asset book rules. Asset book. And also, say suppose you have created a company. Let me help you with that. I want to add a company book. Let's take a new created company like Alpha ANC. Once you click OK, you can see no books are defined. Now, I want to tag my new book be a, since this is the accounting book, then I can configure that. Okay. Now, if I want to tag non-accounting book like federal tax, so what it is populating? Error, add an accounting book to the company before adding the other asset book. So let's suppose you have created asset book for to comply your taxation law, to comply your local gap, to comply your other compliances that is applicable to your company. Like you have insurance company, there might be a chance that an insurance act is enacting on your company. So first of all, just keep in mind, you just need to add your any accounting book. Then later on, you can go ahead and add your other books as well. The first task is we need to create the asset books, and then we need to add to the asset book to the companies. Step one is maintain asset book. We have already done that. We need to give the name and the description, and then we can put it as an accounting book, and we can put it as a checkbox as an accounting book. And we can, let me show you other books as well. View assets books. So for the demo purpose, because the system is already in use, so I have created one accounting book post to the ledger. It is an accounting book and it is act as a primary book. It's used by certain companies as well because we have already added this book to these companies. And then we have also have accounting book rules as well. This is the accounting book. Other books, if you want to add, you can just, so we have added straight textbook. We have also defined the asset book as well. But under the accounting book, we have not checked this mark. We have created AMT book. We have also added to the company. We have created federal tax. So the broader thing is you can define your asset, you can give the book name, you can give the book description, and then you can go ahead and do that. It should be unique, the first of all. And this is our created one. Now, since we have defined asset book, the option of a option is we can modify this as company asset books as well. Now, how we can do that? We need to go ahead and update company. We can also update our company book. How we can do that? We can just, go ahead and do maintain asset book, same. And let's pick this book because we have not defined. I want to change something because assets books are not yet completed. I can just change the name and the thing as well. Like, 01, and onto the description as well. I will add as Workday 01. So basically rules are not defined and I want to make some changes. I can go ahead and do that as well. Now, another way is you can just access the task, update company asset book task, and then you can change that. The only thing is if any fiscal schedule, basically, asset book rules are defined. Fiscal schedule we have already mentioned. And if we have some transactions over there, we cannot go ahead and do that. Say suppose you have multiple books over there. Now, either you can do it manually because this is a one-time task because you have created one assets and then you will add those assets. So either it is a one-time task or what we can do is we can try the bulk load as well. How we can do that? So we have a EIB for that. EIB is a Excel based template, whether where we're defining, we are just putting the data into the Excel based template and we are integrating those. And um, let me help you with that. So we call it, first of all, create EIB. So this is the task, create EIB. I have clicked on enter. You can just give the name, like, put get asset book. You can click on inbound because you will give your inbound means you are giving your data into the Excel sheet and you're importing. Importing means inbound and exporting. So if you are taking anything to the workday, it means inbound. If you're taking anything outside of the workday, which means outbound. Just click OK. Click on next. Now, web service operation, you just need to type asset book, click OK. You can see one web services is appeared. One is put asset book rules and another is bulk import asset book configuration. You can just click on next. Click on next. Click on next. Click on OK. Now, once you click OK, you will have some options available. You can see the EIP name. You can go to the three dots over there. So this is the EIP. You can just go to the view template model. You can generate your spreadsheet. Click on submit. Once you try to click on refresh. So although our purpose is not that, but if you have so many asset book, if you have so many asset book rules, so if anything you want to do at a mass level, you can just go ahead and do that. Let me open that as well. This is Excel sheet. Now, once you open that, you can just enable the. If you notice one thing, we have spread key. Now I want to have a asset book for one spread key you will add. You can just, I want to add, so you can put as a Y into the next column, add only. Okay, some kind of validation is going on. No worries. Yeah. So like you can put Y. Okay, no worries. Let me just show you. So you can put Y to add only. You can give your asset ID. You can define your asset book like we have added business asset training book. You can define your accounting treatment. You can define your depreciation profile and convention. So this is how you can. So once you put down all the services, all the things, all the required fields, you can save this information. So suppose I have saved that, saved, and then you will again go back to your Workday system, and you just need to do launch integration. So once you click on the launch integration, you need to put down your integration like get asset book, and then you can just click OK. Now this thing is applicable for, you will give your attachment here. You can just create integration attachment. That's why giving the correct name for reference ID for each object is ultra important. Like we have created this one. Let's take one example. I'm just taking one of the Excel sheet. Open. Click on OK. And then you can just validate and click on OK. Then it will run. And then you can have bulk upload. So this is how we can get the asset books as well. We can mass upload. We can do the mass upload, bulk upload for the many items. Now, similarly, you, as I have already seen, you can add your secondary book as well, federal tax or something. Now, before going to the asset book rules, what we need to do is I need to explain the depreciation method. Like we have straight line method, declining balance method. So something we need to define as well. So let me give you a brief about that. What is the meaning of depreciation, and then I'll give you a brief about how we can switch the profile as well, how we can create the depreciation profile. So let me give you a straight how we can create the depreciation profile, and then I'll give you the explanation about the depreciation profile as well. So to because our next agenda is to create the asset book rules. Now onto the asset book rules, we need depreciation profile, we need spend category, we need to mention the currency and the threshold. So before either we can I'll show, because I've already shown you what asset book rules look like. First we will define the asset, the either spend category or depreciation. Let's go with the depreciation. Let me open the Excel sheet and then it will help you better. So as a depreciation method, so I'm giving you an overall explanation. We have straight line. Many of you already know that. We have already read that into the, if you're from the non-accounting background, then it will be super helpful for you. Next is declining balance method. Now this is the method of depreciation, and we have so many, but these are two famous. Other we can say sum of year digit method. Now we have a different treatment. Let's take one example. We have procure for $1 lakh. Okay, $1 lakh. Now useful life is 5 years. Now we have year 1, 2, 3, 4, 5. Same with okay. Now amount is 1 lakh. Now what would be the treatment under the straight line and this one? So this would be a simple one, is equal to divide by useful life, and useful life is 5 years. So it would be like 20, 20,000, 20,000, 20,000 each. So as a straight line, we will have 20,000, 20,000. Now, if we just try to, let's take one example. We have a rate of 20% each year as a declining balance method. So like rate of tap would be 20%. Now, the first thing would be it's equal to 20%. It will be 20. Now, on to the next year, what will happen is we will have net book value as 1 lakh minus 20 would be 80,000. So it would be 80,000. Now, because we will apply the same rate of depreciation, what will happen is it will take rate of depreciation as a 20%, but the value would be 80,000. So 20%. Now my depreciation is 16,000. So, and on to the next year, we have net book value 80 minus 60, that is 64,000. Because we are applying the rate of depreciation on the declining value, that is, we are not going straight. So next year would be, rate would be constant, but amount is, declining slightly. That's why depreciation is changing. So on to third year, we have depreciation as 12,800. So this is declining value and so on and so forth. Now, years of some of the year period, what will happen is we will just define the remaining life. So remaining life is, so it will go in the reverse order. So remaining life is 5 year, and on to the next year, remaining life is 4 year. On to the next, remaining life is 3, remaining life is 2, remaining life is 1. We have a sum is 15. So sum we have is 15. Now, how we can apply the depreciation? Depreciation will be applicable is equal to 5 divided by 15 multiply by your total amount. That is 1 lakh. So my year one depreciation would be 33,000. Similarly, for the next year, what will happen is my same thing we will do. 4 divided by 15 multiply by, and we will take into the consideration 1 lakh. So the next year would be 26,667. And similarly, I'll just give you the last one. 15 multiply by my value of the assets, that is 1 lakh. So similarly, 2 divided by 15 multiply by your value. So as you can see, there is a difference. So as per the straight line method, year one depreciation is 20,000. And as per declining balance, year one depreciation is 20,000, that is same. But as per sum of the years digit, it is 33,300. Now year two depreciation, this is 20,000. But as per declining balance, we have 16,000. And as per sum of the year digit method, it is 26.67 thousand. And as per straight line against 20,000. But as per declining balance, it is 12,800 for the third year. Now, as per the sum of year digit method, now it is 20,000 for the third year. Now, this is the straight line method, declining balance method. Now, this is the concept that we'll learn in accounting because this will be super helpful through the entire course. That's why I have explained this. Now, because we have already explained the straight line method and the so what we will do is we will create a depreciation profile and then we will create one basic spend category and then we will try to map to the asset book rules. So before that, let's take a short and quick break and then we'll come from the break and then we will take it forward from the spend category and asset book rules and depreciation profile. And then later on, account posting rules are in detail assets books. And then I help you to understand overall methods of depreciation with some example of straight line method, declining balance method, and years of digit method. Now we have also got the difference. If we apply some certain of method and if we try to change that method, we kind of have difference in years depreciation. So let's directly go to the Workday screen and then we can create some depreciation profile. Then we'll move to the asset book rules because before creating asset book rules, we need to have two things very important. One is spend category, another is depreciation profile. So although we have depreciation profile available, but we gonna create some depreciation profile and then we can configure to the asset book rules. So let me share my screen and then we can take it forward to the depreciation profile in the assets book. Okay. So this is Workday screen. To create depreciation profile, we need to access the task. Yeah, to create depreciation profile, we need to access task, create depreciation profile. And after creating, we can search like view depreciation profile or find depreciation profile. Now, let's give it a name. And we're gonna try it from straight line method. So 480 SL current in service manually. So I'm just putting the description that depreciation will be run if I register it manually. Manually or when issued. Now this the name we have given. We are going to try with the straight line method. So if you can see as a workday delivered, we have declining balance. We have declining balance with switch to the straight line. So if you want to switch, we can pick this up. You can also try rate schedule, straight line, year, and term. So term will be used for intangibles because we don't know how much we are going to use that, and also for depreciating leased assets because we are going to depreciate the leased asset as per the terms of the lease contract. So as of now, we're gonna select a straight line. Now depreciation basis, we can select periods, which means month typically. Useful life would be, because 480 we have this, so let's pick 470. Frequency would be physical period, which means monthly, I would say. Now we have two things, place in service based on. So why it is important? Because from which point depreciation will start charging into our Workday system. Now, if we select manually, so when we register manually or place in service when we issued or upon the acquisition, so we're selecting manually or when issued. Now, as per the depreciation convention, what we can current period, half yearly, half year prorate. So we have this kind of options available. Now, current period is monthly, of course, which we select normally. Current period prorata, we are applying prorata. Half year, half year prorata, mid month. So mid month is taking whenever we are trying to switch to straight line, whenever we are trying to change our depreciation in between. Then we are picking the mid month, mid quarter, modified half year, and next period. So as of now, let's select current period, click OK. So this depreciation profile we have created. Let's create few more. So I'm just copying it. Create depreciation profile. Instead of 480, let's pick 620 SL current. Depreciation method will be straight line. So I'm just repeating the last task. Periods. Useful life would be 620 only. Manually when issued. Current period. Click OK. Some more. Create depreciation profile. 720. So if you just try to notice it down, 480 divided by 12 months, which means 720 divided by 12 months, which means 60 years. So I am creating something for 60 years and so forth. Straight line. So this is how we're gonna create depreciation profile. Let's just try to create one spend category, or may help you to see one spend category. So how we can create a spend category, although we're gonna learn it into the next chapter because we need to track the assets. But let me show you how a spend category looks like. Find spend categories. Let's see one spend category, that is artwork. Now, when we search for the artwork spend category name is artwork. The hierarchy, this spend category artwork is linked to two hierarchies. One is all spend category and all other spend category. Name is artwork. Now, if you notice it, procurement usage is yes, expense usage is no, supplier invoices is yes, adopt. These things we can configure while creating the spend categories. If I see spend category in artwork, spend category ad hoc payments, procurement use, now just be mindful with the track items. If I want to track, I want to run the depreciation or I want to create or register the asset, it must be trackable because we need to track, we need to trace this asset. Then only we can apply for the depreciation. And also, I want to call out one thing that is very important in case of the leases. Now, if you want to create a spend category that is meant for the leases, be mindful to check as track item yes, and for lease yes. Then you would be able to depreciate the leased assets. So we have seen that spend categories. Now let's deep dive into the asset book rules. Now we have already seen that asset book is kind of multiple fold accounting book, textbook, state book, local gap book, or any other book you want to comply with other laws. Now, why asset book is important? Because let me show you the asset book first. View asset book. Asset book rules actually. So we have accounting. We need to take the reference of the accounting because we have already created. Let's just tape it down now. So this is our asset book rules. Now we can test this book rules as well, whether it is working fine or not. Asset book, we have given the accounting because it will result in accounting treatment and it is also other than expense. Because we have meant for default accounting treatment as an expense. Now, normally it will be expense of with these spend categories, except we will put a threshold and we will result in accounting treatment that is depreciable capital asset. So basically, if we select as an accounting treatment depreciable capital asset, then it will not get expense off, it will be capitalized and then depreciation will be charging. Or else if we below the threshold, even the resulting accounting treatment is depreciable capital asset, it will be expense off. So the broader sense is we need to set the foundation of the entire asset module, and that foundation is asset book rules because we are defining the spend category that is actually helpful to derive the accounting of any asset lifecycle event. We have asset class, asset type. If we want to drill down more reporting, then we can put the asset class in the asset type. We need to mention our company on which this asset book rules are applying. Company, currency. Amount threshold. So threshold we are deciding as per the fixed asset register policy, FAR policy. Now this basis. So and then the accounting treatment and the resulting profile. So we have already created profile. Now if I want to go to the related action, put edit, edit asset book rules. Maintain asset book rules. So we're gonna pick accounting because I'll show you few additions as well. So this is how it looks like. Let's pick artwork and then we're defining the, you know. So now how we can add, we can go to the plus button and then we can select our, because we have already seen artwork is trackable. We are picking the artwork. If we want to put the asset classes, then we can also do that. We can put the asset type as well. Now let's pick the, so the broader sense is, let's suppose Global Modern Services has a capital expenditure when they purchase the artwork and for their office actually. Now the Global Modern Services will capitalize this cost if it will cross a threshold of $1,000. So now we all know that artwork is non-depreciation. So they will record the artwork but not depreciate. So now if I take another example of any vending machine or something, then we can depreciate it. So that's why let's pick GMS company. GMS USA. We are putting the threshold as 1,000 and 1,000 as a extended amount. Resulting treatment would be, we can pick like non-depreciable capital asset because we have selected non-depreciable capital asset. The resulting depreciation profile will be empty. Now let's take another example of company car. Yes, we have company car available there. So for the company car, let's just select one of the asset classes as well. So we have selected one of the asset classes that we created. And let's suppose this will be applicable for GMS USA. So under the company, we have picked our company as well. Now amount threshold would be 5,000, I would say. It would be like unit cost and depreciable capital. Yeah, the accounting treatment would be depreciable capital asset. Let's just select for the office furniture as well. GMS USA. Office furniture and equipment, let's just put 500. Now 500 as a unit cost. Depreciable capital assets 36 is fine. Similarly with hardware computers, let's select GMS USA. So this input will be given by the client. It is decided by the top management, your finance team. This is we are taking from the FAR policy, fixed asset ratio policy, or capitalization policy of the assets. Let's suppose extended amount. Now let's click OK. Now we can see at the overall level for artwork, we have selected for this company, GMS USA. Amount threshold is 1000, and amount threshold, it will be applied for the extended amount, which includes everything. Now unit costing is unit costing, and we can add extra things as well. But extended amount is the total billing. And because artwork is non-depreciable, that's why we have selected non-depreciable capital asset, and that's why resulting profile is empty. Now we have also kind of selected for lease assets. So we have spend category, car lease, IT lease, lease building. We have selected our company. We have the company currency, and the extended amount is 500. The resulting depreciation is capital asset, and result depreciation profile is term. So it will be depreciated as per the term of the lease contract. Now next we have selected vending machine for GMS Germany. We have not provided any threshold. Same with the GMS Germany for vending machine. Now company car, we have also selected asset class that we created. We have given the company name. Company currency automatically pick up as the function currency of the company. And then we have given the amount threshold. It will be applicable for the unit cost. Treatment would be depreciable capital asset. Now accounting treatment is very important, and resulting depreciation of 60 SL. 60 means 60 divided by 12 is equal to 5 years. Same with the office furniture. So this is how, asset book rules are defined. Now, this asset book rules is for accounting asset book. We can also configure the same for textbook as well. Let me show you that as well. Maintain asset book rules. Let's say federal tax. Click on OK. Now, let's take the same example of hardware. We have selected our company. Let's suppose, as per the federal tax, for all the hardware computers, threshold to capitalize is $100. That is also unit costing. So what we have seen is, as per the accounting, it is something different, the threshold. But as per state tax or taxation law, it is different, and resulting depreciation profile is this. Similarly, we can do for office furniture. So in the accounting book, we have meant for office furniture, and we have put that threshold as a 5,000, 500. Let's just put random $400. Also at unit cost. 6 SL. Click on OK. So what we have seen is we have maintained the same asset book rules as per the federal tax. We have also maintained this asset book rules as per the accounting. Now, on the accounting asset book, accounting principles will be applicable. On this, taxation law will be applicable and it will prevail. So, whenever we try to get the reporting and the depreciation, we can just select the book and then we will see as per the norms, it is charging the depreciation, it is reflecting to the net book value of the assets. So that's why it is playing a key role in terms of the giving the reporting and then the accounting treatment. So we have created the asset book for accounting, we have created the book for federal tax. If we want, then we can also maintain some few more. Let's again go to the federal tax. So I'm adding few more, like one building, or let's say lease building. We're taking any asset class. We're also taking asset types like uh, real property. Company will take same that we are using most of the time, GMS USA. We will also give some threshold, $1,000, and this threshold will be applicable to the extended amount. Now, resulting depreciation treatment would be, so we have expense, we have non-depreciable, we have depreciable capital asset, and resulting profile, let's say 468 something, and click on 480. Click on OK. Just be mindful for the leased building. We have picked the asset class as 39. We have the asset, the real property as asset type, and this one. What we can do is parallelly, we can just open this in a new tab. Go to the related action. We can notice track item as yes and lease is yes. We just wanted to make sure that this is there. If we want to create a new spend category, we can also kind of create that. Let's do one thing. Let's create one spend category and we'll map it to the either accounting book or federal textbook. So maintain spend category. Create a new spend category. If you search for the maintenance spend category, you can see the existing category is already there. We can just add like buildings. Buildings we have added the name. Scroll down, you can see commodity details. As of now, you can give the description, business assets, training, spend category in display. Yes. Now, in terms of the usage, that is very important. Let's select procurement and supplier invoice. We can select the track item. Now, although this part is need to be explored into the P2P course, you want to learn about this in details, you can explore the P2P course as well. But let me just show you the asset subheading here. We can see track. If this would be an intangible, let's select, I would select copyright, and I need to select as an intangible assets as well. If this is related to the lease, then I need to select this one. Now, what I wanted to show you as a default class, let's take this one as a default class and real property. This is how we can map our spend category as well to default asset class and the track. Click OK. Click OK. We can see find spend category. And give the name buildings. Click on OK. We have a building. You can see buildings. BA training is a description procurement. Once we scroll down, track items as yes. Maintain as a book rules. Federal tax. Add buildings. If we select this, we don't need to select as a class as a type because we already selected. Under the company, we can pick our company GMS USA. Amount threshold 1000. Unit cost resulting depreciation, depreciable capital asset, and resulting profile. Stick. Okay, 48 SL. Click on OK. So that's how we can create the spend category, and then we need to make sure the on the asset side we can select the default asset class, default asset type, and we need to track it. If we are maintaining a spend category that is for the intangible asset, please make sure to check that box as well. So we have created asset book rules for accounting book, federal tax book. We have also created the a definition profile as well. Now the thing is, now we have mentioned the spend category, how the accounting will be derived. So that will be derived through the APR. Let's straight go to the account posting rule set. Now APR is account posting rule set. Let's just check for few one. View account posting rule set, standard corporate. Click OK. Now be just mindful and cognizant of the fact that we have account posting rule set for all the items. Now, what you can see is accumulated depreciation and some things related to the business assets. So, accumulated depreciation is that business assets accrued liability, business asset disposal, business asset disposal gain, business asset disposal loss, business asset disposal, business assets multi-book settlement. Now, this is for normally we are using for the converting. So if you are converting your data from legacy to the Workday, so say suppose you are using SAP, now you want to take out Workday as a system ERP, so you need to do the conversions for all the data from the cutoff date or go live date of your implementation. Then this APR or account posting rule set is useful. But broadly, so these are the APR onto the left side. Once you scroll down, the important APR for assets is spend. Now, under the spend accounting posting rule set impact the business assets, and it is not related to the costing as well. It also related to the depreciation as well. So we need to broadly define our spend category and then any resulting ledger account. Now, how you will get the ledger account? Let me also help you to visualize this, how we can get the ledger account. Although the maintenance of the ledger account and account posting rule set is under the purview of record to report or FDM. So an FDM guy or record to report team will take care of this. You just need to mention your span category and try to map relevant journal ledger so that once you try to create a PO or once you try to register the assets, it will you just need to mention the spend category and then accounting will be generated as per the mapping of the account posting rule set. Now, what you can see is ledger account. Let me help you to see all the ledger accounts so that you would also get to know how it is linked. So you can just click on view account set. Once you click on view account set, see, although this function is under the purview of a record to report or the FDM guy, but just to help and to contextualize. So we have account set as so many. Let's select corporate. Once you select corporate, you would be able to see the accounts at corporate. This will act as a chart of accounts. Now, chart of accounts is ultra important. Basically, all the GLs, we call it as a chart of account, how many companies we are using, and this is the conversion, the standard. Now you can see the ledger account, account set, and unique identifier for each type of account. And then let's take one example of the first one. Account set is corporate, identifier is 1000, and account name is cash, and ledger account type is assets. We can also restrict the company, which company want to use this account set. Let me help you to get to any of the assets. Let's take one example of identifier name 1037. So we have unique identifier as a 1037. We have accounting name as PT, dining tables, and the chairs. Ledger type is assets. And next one is corporate 1038 and the laptop G11 assets. Similarly, we what you can see is material building A. So many accounts. Again, you go back to your account posting rule set. You will add here. You will pick like building A as your ledger account. Let's take equipment. Now resulting work tag. Not picking anything. Dimensions, we can add a spend category. Now, under the spend category, we can see so many values are coming up. So, under the equipment, let's take computer accessories. Click on OK. Now, what you can notice is whenever we are trying to pick down the computer accessories as a spend category on PO, on supplier invoice, on trying to register the asset, we just need to mention the spend category while registering the asset. This spend category will be linked to this equipment. So you just need to mention the spend category on your line level. Once you approve those transactions, accounting will be auto-generated and you would see on the debit side, 4 times 5 equipment will be debited and the credit side on the bills payable. So this is how accounting will be derived for assets. And also be mindful, the spend account posting rule set shows the initial accounting that is generated out of the registering the assets. Let me also show you few more account set. Now, how can you make sure? Because if you go to search for the view account posting rule set, you can pick it as a all. You would see so many accounts that we have created. Now, how we gonna make sure that this particular account set is relevant for my company? What you need to do is, yes, your account set is relevant or not. Although this is completely for the R2R guy, but you can do one thing. You can search for your company, GMS USA. Just click on OK. Once you click on OK, you would see so many reports are coming up. Scroll down. Now, if you scroll down at the bottom, we can see two companies, GMS USA Inc. Vishnu. Now, let's select this one, this company. So this is how our company looks like. We can see members, details, roles, security group, and additional data. Just go to the related action at the top. We call it three dots or related action. You can go to the company and you can see your view accounting details. If you click on view accounting details, you can see the overall accounting details. The function currency of this company, GMS USA, is USD. Fiscal schedule is standard corporate. So they're following the year end as of December. Account set that I already shown is corporate. Account control rule set is a standard corporate. Now account posting rule set. You can just select on the account rule set. You can just open in a new tab. Once you open in a new tab, you would get to know, okay, this account set is relevant for my company. Now, let me help you with that. You can see accumulated appreciation. We have a default ledger account is 1700. So whenever accumulated appreciation needs to be there, default ledger will act like that. You can see we have created the 2GL as well. 1790 for accumulated amortization for rights and accumulated appreciation for, we have mentioned the spend category intangible car lease. And once you click on accrued liability, we can see default ledger as 2050. So default ledger needs to be there so that it will pick up. Now disposal donation, we have 7400 charitable contribution as a default level ledger. For disposal gain, we have 9,000 gain or loss on the sale of assets. So please be cognizant of this fact that default ledger should be there. 9,000 again, and as a resulting posting condition, you can see 9,000 gain or loss and disposal type is a sale. We're gonna see in a later in the class. Same disposal, same multi-book. We can see multi-book as a lease type. Once you scroll down, yeah, we have few rules for lease asset as well. So we have mentioned the right of use assets because whenever we do the leasing, we create the right of use assets. Asset contra, lease asset expense, and lease liability. Once you scroll to the spend, that is important. Let me help you with that. So as a artwork spend category, you can see we have created resulting ledger as a investment. Marketing is normal. Scroll down. Yeah. For software purchases, we have created a spend category walk spending training. And this spend category is linked to the software purchases. Again, software purchases, duplicacy, deferred advertising expense. So, and also intangible. So we have created one spend category as a intangible. Now, intangible rights. Some more furniture, fixture, and equipment. So, in a broader sense, the spend rule of APR is very important to generate the accounting for assets. Let me help you with some more. If you scroll to the bottom, we can see one resulting ledger account, that is depreciation. Now, this depreciation, if I open this ledger account into the new tab, what we can see is the unique identifier name is 6700, account name is depreciation, and ledger account type is expense corporate. So basically, we need to depreciate and it will hit my PL. That's why the type is expense. Now, the broader thing is this GL will come into the place when we hit the spend category of depreciation FNF and E, that is furniture and fixture, and depreciation on software and hardware. So basically, the spend posting rule is very important and it is used to record the accounting. So as per, if I concise the class, what we have seen is view asset book. Once we see the asset book, we can see accounting and state tax, AMT, federal tax, IFRS, IFRS 16. So many asset book we have created, and we can see asset book name. It should be unique and it should not be duplicate. Asset book description and accounting book, whether a particular asset book is act as an accounting book, so we can select one of those. And also, whenever we are selecting the accounting book, then the accounting will be generated used by company. So whenever any company are going to use this asset book, then the account will be increased. We can see side by side asset book rules as well, that is associated with my asset book. Now, asset book is accounting, same, and default treatment is expense. But if you mention about spend category, company, and the threshold as per the FAR policy, we can also select our resulting accounting treatment. Just be mindful, your spend category must be track as a tick. And if you're selecting for the leases, it should be tick as well, track plus lease. And if you are giving for the intangible, just be mindful, it should tick as a track as well as intangible so that it will pick up our, accounting. Then spend category we have mentioned. Asset class, if you want to, for reporting purpose, we can select that. Asset type, we can select that. Company, we can select the company currency and amount threshold. Now, depreciation treatment is very important and resulting depreciation profile. So please be mindful. We need to select the depreciation profile as a term for lease asset, as a term for intangible asset, and if the if it is apart from lease and the intangible, we can select the depreciation profile as per the useful life. So we have created 24 SL current, we have created 60 SL current, we have created now 36 is typically a month. 36 month as a straight line depreciation of method as and the period is current. That's why we have given the naming convention like this. So please be mindful while creating the depreciation profile as well. Now, let me also show you one of the depreciation profile for the town. We just can see into the new tab. Now, if you see this term depreciation profile, which is useful for in case of depreciating the lease asset as well as intangibles, we have given the name as a term. We have given the profile depreciation method as a term. We have given the rate basis as a number of days. We can also give the spread even. So number of days is simply when we select the number of days, which means so if the month is of January, then it will calculate number of days, that is 31 days. If we select the month as a February, then it will take into the consideration 28 days. So what it will do is for the first month, that is January, you will have your amount that is depreciation. Now it will create some prorata. It will multiply 31 divided by 365 or 366 if this leap year, then depreciation for the particular of the Jan, it's calculated. Similarly, for the month of Feb, it will do your amount multiplied by 28 divided by 2365. It is a non-leap year. Otherwise, your amount multiplied by 29 divided by 366 if it is a leap year. And for the March again, your amount multiplied by 31st divided by 365 or 366. So that's how my depreciation for each month is calculated as per the number of days in particular month. If I put down the spread even means we will just take care of a month. So depreciation for the month of January, for the month of March will be same because we are just spreading even as per the month for entire depreciation. So let's suppose we have a entire depreciation for the year is 1200. So if we select method as a spread even, which means it will be for 1200 divided by 1 divided by 12, which means $100 for each month, irrespective of number of days of the each month, because we have selected the spread even as a method. So for the January month, it would be 100. For the Feb month also, it would be 100 because of the spread even. But if you select vice versa, like number of days, so it will take the consideration number of days as well. So please be mindful of this factors. And lastly, we have seen APR. So APR is very important. Let me again show you the APR. So APR and the account set, because that is ultra important. So APR under the spend, what you can see is your resulting ledger account as well as your value. So because broadly we will use the spend category while creating the PO, while registering the asset. So now this spend category is linked to some GL, then it will be auto picked. And because this will be auto picked, you would see your, if you go to the, after your approval, if you go to the accounting, you would be able to see the accounting as well. Something is debit, some ledger account is debit, and some ledger account is credit after your approved transaction. Now, so until now, so I think this is it for this module. We want to cover the asset book rules, and this is the foundation. Please, you can explore more. So first we have covered asset book. Second, we have covered asset book rules. Under the asset book rules, two things are very important. One is spend category that should be trackable. Again, I'm emphasizing, if it is for tangible assets, then please be mindful. You need to select the track items as a checkbox while you are creating the spend category or spend category hierarchy. And if it is lease assets, please select both the option track as well as lease, so that it will be termed as a lease. Now, if you are creating spend category that is meant for the intangibles, please select track plus intangible as a tick item so that it will be selected. Now, second thing is definitional profile. If we know that the useful life, then we can create the definitional profile. Like I have a software which has useful life of the 2 year. So what I'm going to create is I'm going to give a naming convention 24 SL, that is straight line or concurrent. If I'm using for the declining balance method, so 24 declining balance current. So it will be depreciated over the 24 months. Now, if I know that I have month 36 month as a useful life or 3 years, what I'm going to create is definite profile, and the naming convention would be 36 SL or declining balance current, so that it will be depreciated over the 3 years or particular month. Similarly, for 5 year, 60 I'm going to select because we have a 60 months in a 5 year. So please be mindful of the SL. And if you want to switch the depreciation between SL to declining balance or declining balance to the SL, you can select the switch method as well. And lastly, please be mindful for the account posting rule set so that your accounting will be dry.